Welcome to an M1 Finance monthly dividends portfolio update. The reason why we are talking about this today is because one of our subscribers asked for an update on this. So just a good reminder that if you guys want to see anything on the channel, to just let me know in the comments. And if I find value in creating an update video, we will do that. So here we go. So for those that don't know, this is the monthly dividend stock portfolio. This is kind of a side project, but every single company here pays a monthly dividend. The SPHD is actually more of an index or ETF that is a group of stocks. So this one specifically is low volatility, high dividend. So a good thing to have in this portfolio because a lot of these stocks tend to get hit pretty hard during downturns. As you can see, the overall return of this portfolio is down 40%, which is pretty rough. But this isn't a capital gains play. Obviously, I hope these stocks go up over time, but the main reason I built this portfolio is to have high earned dividends. So we basically started this back in 2021 and kind of slowly bought into it. And then I started really dumping money in the past 6 months. So yeah, overall $50 in dividends, which is quite a bit. And again, they pay monthly, so that's monthly cash flow. I'm not getting $50 a month yet, but we will get there. So yeah, like I said, these stocks tend to get hit pretty hard. Real estate obviously isn't doing too well right now, so that's 15% right there with Realty Income. Super solid company, so I'm not really worried about it. And then a lot of these other companies are BDCs, and we have an oil play here. And then I think Gain is another BDC. And then we got SGR, which is actually telecommunications in Canada. So just a bunch of random companies. There's not a whole lot of companies that pay monthly dividends, but these are the ones that I'm going with for cash flow. And I tried to actually target the allocation in a way that feels more diversified. Obviously, with a lot of these companies kind of being in the same sector, it's a little bit tricky, but this is the target that I went for. Part of me is wondering if I should just split it even across each one, just because there are so few companies in here, and then just have a higher dividend payout. But I don't know if that's really worth it, just because, again, the SPHD is like a basket of stocks, so you're getting a lot more diversity there, and it really kind of helps protect the portfolio from huge swings. So that might be something we do in the future. I'm not really sure yet. Just kind of thinking out loud here, but as far as the performance of the portfolio, it's been pretty rough the past couple weeks. I guess every market really has been, so I'm not really concerned about it. I actually did pause my auto invest into this portfolio just to put a little bit more focus on buying out of my margin on Robinhood. I think we talked about that in the last video, so I won't go into that too deep here, but I just don't know which way the market's going to go right now. I'm prepared either way. The margin, is a little bit risky, so I'm trying to just pay that down in case things go down another 25%, which is totally possible. So that's kind of what's going on there. I would love to get back into building this back up, especially because it's under $2,000 and everything's been hit pretty hard. It would be a good buying opportunity. Regardless of whether or not I care too much about the capital gains in this portfolio, it's just good to have stocks at a cheaper level for the time where, maybe I need to pull money out of here and sell off some of these stocks. But that's not really what I want to do here. The whole idea was to just put a little bit in here and there and to just let it build up over time into something that I could actually take money out of by just taking the dividends out and not actually selling. So that's the idea, but we'll kind of see. As far as like my investments go, if I have an emergency, this is one of the first portfolios that's going to go, purely because, again, it wasn't a capital gains play. It's more of a dividend play. So I can always just buy back these stocks at any time and get pretty much the same dividends. So yeah, hopefully that answers the subscribers' questions about the portfolio. As far as these companies, I don't want to go through safety scores or anything like that. Simply Safe dividends kind of, that's a service they provide, so I don't want to like broadcast their service publicly anymore. It kind of feels like the wrong thing to do, and I don't know if there's a legal issue with that or not, but regardless, I'm probably not going to pay for that for another year anyways. $400 for that. I kind of already have my portfolio built out. And you guys can kind of do your own research. We've talked about these companies several times, so there's just really not too much to go over here. But if you have a specific question, just let me know in the comments and we'll definitely get that taken care of. But yeah, as for right now, I'm just not really putting money into this portfolio until that margin's paid off in Robinhood. And then once that is done, I'm going to kind of reassess. Not going to lie, Tesla stock is looking really juicy right now. We'll take a quick look at that. They've just been selling off like crazy. So I don't know. I'm pretty bullish on Tesla. So I would like to get a couple more shares in there, maybe get up to 15 shares. But like I said, right now, paying off the Robinhood margin is kind of the more important thing right now, just because we're not sure which way the market's going to go. So that's about it for this video. Just a quick 6-minute or so video. If you guys have any specific questions, let me know. I'm kind of just rambling at this point. So I will see you in the next one.